Welcome to The Explainer. Okay, look, today we're taking a seriously wild journey through our source material. We're going to start with some strict data-driven Bitcoin charts, but I promise you, by the end of this explainer, we're actually going to be talking about reverse-engineered flying saucers and quantum heartbeat trackers. Yeah, really, you heard me right. Stick with me here, because the bridge between your crypto portfolio and top-secret military tech, it's a whole lot shorter than you think.
I mean, seriously, what do U.S. inflation, institutional FOMO, and reverse-engineered UFOs actually have to do with Bitcoin? Well, let's zoom out and connect the dots.
Section 1, the Bitcoin breakout.
Okay, let's dive into this. We're starting at the micro level with the immediate technical analysis of the crypto market. Because before we can look at the whole global chessboard, we've got to examine the king, right? And in this case, that's Bitcoin. As noted in the source material, Bitcoin started the week incredibly hot, pushing right up against that $81,000 mark. This shows us that despite all the broader market panic out there, the asset is showing some massive upward trending momentum. It's not just moving sideways anymore, it is actively climbing.
Now, what's really interesting about this slide is the massive technical hurdle sitting right in front of us. Bitcoin is trending right up to the 200 moving average. And if you follow technical analysis, you know that 200 MA acts like a massive ceiling, an absolutely crucial resistance level. But the source indicates that if Bitcoin can just smash through this resistance and break that next key level at 84,000, we could be having a very real conversation about hitting the 90,000s pretty soon. And let's be honest, who doesn't love the sound of that?
Section 2, Global Macro Chessboard.
But look, Bitcoin doesn't just exist in a vacuum. To understand if it actually has the fuel to break that resistance, we have to look at the geopolitical factors driving market fears. Because fear is a massive catalyst for asset movement. The source highlights a pretty fascinating dynamic playing out right now, specifically pointing to a recent statement from India's Prime Minister urging citizens to cut back on fuel use and gold purchases. So what does that matter to us? Because it reveals this deep-seated fear of fiat currency collapse. When global tensions rise, everyday people realize their paper money is losing its purchasing power thanks to inflation. So what do? They panic and run straight to store value hard assets, like gold or ideally Bitcoin, to protect their life savings. And speaking of those global tensions, the source neutrally outlines this kind of 4D chess theory regarding current U.S. foreign policy. It suggests that Middle East blockades are allegedly being leveraged to cut off up to 60% of oil imports to China. The theory basically posits that this isn't just random conflict, It's a strategic move to keep China in check, literally forcing them to reconsider any potential military actions regarding Taiwan simply because of oil shortages. It is a wildly complex, high-stakes game of global leverage.
Section 3, U.S. Policy and Inflation.
So, we've seen the global board. Now let's zoom back into domestic U.S. economic data and political maneuvering. How is the U.S. handling its own internal pressures amidst this giant game of chess? Well, we are looking at an anticipated jump in the Consumer Price Index, or CPI, rising dramatically from 3.3% to 3.6%. This data is basically the pulse of inflation. So the crucial point is that a hotter inflation read directly impacts the outcome of upcoming Federal Reserve FOMC meetings. It could potentially stall rate cuts and tighten up market liquidity. It's a stark reminder that while Bitcoin is surging, traditional economic indicators are flashing some serious warning signs.
Yet, paradoxically, as inflation rises, the domestic regulatory environment for crypto is actually warming up. The source points out a major compromise with the Clarity Act, which basically allows stablecoin issuers to offer yield on specific services. Guys, this is a massive green light for the industry. And to prove it, Circle, the US stablecoin powerhouse, just raised $222 million from heavyweights like BlackRock, valuing the company at $3 billion. That's billion with a B. The traditional financial titans are absolutely setting up shop in the crypto world.
Section 4, the institutional FOMO. Which brings us to our next major theme, the massive, undeniable weight of traditional finance entering the space. We are talking about literal institutional fear of missing out. The sheer velocity of capital moving into this space right now is just staggering. In just a 7-day period, we saw a net inflow of $1.25 billion into Bitcoin ETFs. Plus, add another $858 million from global crypto funds. The business cycle is actively bringing massive liquidity back into the market, and it's being driven by relentless accumulation from institutional whales who, frankly, simply weren't here during the last market cycle. And speaking of whales, check this out. The source highlights this absolutely staggering figure.
818,868. That is the total amount of Bitcoin held by Michael Saylor's MicroStrategy and other associated entities tracked by the source, fueled by yet another recent $43 million purchase. I mean, at this rate, you really have to wonder if they're going to leave any Bitcoin for the rest of us. The source drops this quote: "Imagine when FOMO hits, man. It's going to be very different than previous cycles." And honestly, they hit the nail on the head here, because the players on the field are completely different now. It's not just retail investors buying fractions of a coin on their phones anymore. It's wealth managers, massive corporations, and giant funds realizing that hard assets are their only escape from fiat inflation. The entire structure of the market has permanently shifted. Section 5, Secret Tech and UFOs. Let's move to the macro level and see how this all builds. Because now for the massive zoom out, the source takes us on. We're going from Bitcoin ETFs to quantum fake diamonds. Yes, you heard me. According to some absolutely astonishing claims in the source, this is a highly classified sonar-like technology. The story goes that a stranded pilot whose plane went down in the Middle East was rescued because the military used quantum tech to ping molecules inside fake diamonds, allowing them to literally triangulate the pilot's human heartbeat from hundreds of miles away in the mountains. I know it sounds straight out of a sci-fi Hollywood script, but the source presents it as a very real-world application of hidden military spending. And this brilliantly illustrates the source's ultimate hypothesis. If we have quantum diamond heartbeat trackers, what else do we have? The source points to the official release of government UFO documents, theorizing that a lot of these unexplained sightings, ships floating around without any traditional propulsion, are actually reverse-engineered U.S. military craft. It's framed as the logical output of spending $1 trillion a year on defense for decades. It suggests that, right behind the scenes, we might already possess Generation 5 fighter jets and anti-gravity technology completely hidden from the public eye. Which leaves us with a highly provocative question. We started with an $81,000 Bitcoin breakout, we moved through the geopolitical chess match of global oil, and somehow ended up at anti-gravity ships. If trillion-dollar military secrets like reverse-engineered UFOs are actively flying around out there, what else is hiding in plain sight on the global macro chessboard? It really forces you to completely rethink the underlying forces that might be driving our markets. Thanks for joining me on this explainer, and I'll catch you next time.